Good morning, bulls and bears, and welcome to your morning market update. Starting with the US dollar index, which has extended its rally above 99.2 after gaining nearly 1% in the previous session. The move is being driven primarily by safe haven flows as geopolitical tensions in the Middle East escalate sharply. Reports indicate US is preparing for a large-scale strike on Iran, targeting missile production facilities, drone programs, and naval assets, raising the risk of broader regional conflict. Energy prices have surged alongside the rising tensions, and that's adding an inflationary layer to the story. As oil climbs, markets are reassessing the policy path from the Federal Reserve. Expectations for the next rate cut have now been pushed back to September from July, although two 25 basis point cuts are still priced in overall. Higher oil prices also structurally support the dollar since crude is settled in US dollars globally. When oil rises sharply, energy importing nations must secure more dollars, tightening liquidity and lifting the currency. From a technical standpoint, the index is trading near the middle of its broader range, but it's approaching resistance at 99.23 and 99.66, which aligns with the 280-day moving average. A decisive break above that zone could open a move toward the psychological 100 level. On the downside, support sits at 98.68 and 98.43, with a deeper floor near 98. Turning to energy markets, crude has surged roughly 6% again, pushing firmly above $75 per barrel after a similar gain in the prior session. The key focus is the rising risk of disruption through the Strait of Hormuz, which accounts for approximately one-fifth of global oil shipments. Iranian officials have warned that vessels attempting to pass through the strait could be targeted, effectively freezing tanker traffic amid growing security risks. At this stage, the core issue for oil markets is no longer whether there is enough supply in the ground, it's whether oil can be safely transported. A contained conflict would likely keep prices anchored in the $70 to $80 range, but any further deterioration could quickly force markets to reprice crude toward $100. Technically, momentum remains strong. The 14-day RSI is elevated around 78, signaling overbought conditions but sustained upside pressure rather than exhaustion. Immediate support is seen at $73.2, followed by the psychological $70 level. On the upside, resistance comes in at 76.74 and then $80. In precious metals, gold has seen sharp volatility after surging to fresh highs above $5,400 earlier this week. Prices pulled back nearly 5% to around $4,997 as investors rotated into the strengthening dollar. Rising bond yields and delayed rate cut expectations have reduced gold's near term appeal. That said, the broader uptrend remains intact. Gold continues to trade above its 20, 50, and 100-day moving averages, reinforcing underlying bullish structure. Momentum has cooled but remains positive, with RSI holding near 60. On the upside, resistance sits near $5,170 and $5,250, followed by $5,300. On the downside, watch the key psychological level at $5,000, then $4,900 if pressure builds. Finally, in FX, the Aussie briefly pushed toward 0.7125 before reversing sharply back toward 0.70 as broad-based dollar strength took hold. Geopolitical risk continues to weigh on risk-sensitive currencies like the Aussie, while traders have reduced expectations for aggressive Fed easing in 2026. Technically, the pair is holding just above the critical 0.70 level. A break below could expose 0.6944, while a daily close back above 0.708 would shift focus towards 0.71. Despite the pullback, the broader medium term uptrend remains intact as prices hold above its key moving averages. Overall, geopolitical headlines are firmly in control of markets, safe haven demand is supporting the dollar, oil is pricing in transport risk, and cross asset volatility remains elevated. That's your morning market update. Stay disciplined, manage risk carefully, and have a productive trading day ahead.